Insurance Business TV was recently in San Diego attending the WSIA Annual Marketplace Conference. Whilst there, we caught up with leading insurance professionals who addressed some of the top challenges the industry is facing today.
Yeah, I mean, carriers and brokers need to work together more effectively to be able to put additional products into market for consumers, right? When you think about what the carriers are trying to do and what the brokers are trying to do, the end goal is essentially the same, right? They're all trying to put better coverages and more products out into market for consumers. What you see now with technology and the advancements that we've seen with insurtechs and other distribution platforms is there's better opportunities for those groups to come together and create those products in connection and in partnership and actually make them available in the market through different distribution channels, right? And it creates better opportunities for both agents to offer better coverages and creates more opportunities for consumers to access better products that provide the coverages that they actually need for whether it's their business, their home, whatever they're looking for. It just creates a better experience all the way around. Yeah, I mean, both ways, right? I mean, the carriers typically have more experience, they have more data, they have more insights on the consumer. The brokers have a better relationship with the end consumer in a lot of scenarios with the customers that they're trying to go after. You always have a competitive nature of what broker's working with what carrier, what products that they're trying to offer on their platform. But at the end of the day, I think it's really around the limitations that we've had with insurance, all the different CAT events that have started to happen, the increases in pricing. The availability of product and the availability of coverage is good for everybody. Nobody wants 100% of the risk. So I think you're seeing more of these partnerships spin up and more opportunities for brokers and carriers to come up with new innovative ways for them to be able to put new products in the market, which is, it's going to be really important for the industry as we continue to grow. Yeah, so just think of a distribution platform, right? Think of a modern technology platform that has AI-based quoting platform, right? That can run data analytics, property analytics, understand exactly what the weather is doing at a specific location or the types of products that a specific business or location actually needs. And then they can go and procure very specific coverages for that business through a carrier relationship that they can then set up in an automated way. So if you think of 10 years ago, what it took for a broker to be able to get a quote for a commercial property business in Florida and the underwriting hurdles they had to go through, the amount of paperwork that they had to go through. Now, I won't say that it's 100% automated, but probably 70 to 80% of it is now automated to where what used to take weeks or months now happens sometimes in hours or days, which is just a totally different experience than what we were used to, just 10 years ago. That's a good question. It's I think an unknown answer to the most part, right? When you think about how E&S products work versus admitted products in the markets, there's less regulation, there's less control of regulators. Regulators have always been, very involved in product filings, product development, what the consumers are seeing, pricing changes. What I think you're going to end up seeing as the E&S market continues to grow is you're going to start to see more involvement from regulators and trying to actually have a heavier hand in trying to regulate what's taking place. They don't want to see, I wouldn't think that they'd want to see the E&S space outgrow the admitted market space where they have their control into a market where they have less control. So what I hope we'll see is that you'll actually see better relationships between the E&S carriers and the E&S providers and regulators, as well as admitted carriers, so that you have this combination of products that end up providing a better experience for the consumer so they can access what they need, right? California is a great example of a market right now where you're seeing a heavy influx of E&S market availability on lots of products after the fires in Southern California earlier in 2025. So the regulators are going to have to start to be a little bit more involved and make sure that the people that are operating in the E&S space aren't taking advantage of what you can do in the E&S space and that they're using it for good, which, what you start to see more and more. A lot of the E&S groups that have spun up and a lot of the carriers that are offering more coverages there are big name players that have very big balance sheets, that have very good financial ratings. It's not the one-off companies that would come and go like you used to see in the past. There's a lot more stability, I think, in the E&S market than there used to be. So it'll be interesting to see where it goes, but it's going to dynamically shift over the next 10 years and it's going to continue on that upward trajectory. So it'll be interesting to see where it lands. I don't think they would. I don't think they would. And the reason I say I don't think they see them as competitors is because if an admitted carrier has to pull out of a market, their customer is now left without coverage. So what I hope that you'll see, and this is something that we do at Adaptive with our parametric products, is try to find solutions that actually fill the gaps that are left by those carriers so that we can create a new offering so that if a company like a State Farm or an Allstate or any other company has to pull out of a market or has to pull back in a market or has to limit their coverage options in that market, an E&S player can come in and can fill those gaps and actually make coverages available to insureds who need the coverage. Because at the end of the day, forget about who the E&S carrier is or who the property carrier is or the admitted carrier is for a minute. The goal is to make sure that the end consumer is the one who's able to actually find a policy and find coverage for the needs that they have. That's the important piece of the equation that needs to be filled. So from my perspective, and having been in the industry for 20 plus years, I don't look at it as an us versus them. It's we're trying to fill a customer need. We're trying to create a product that's available in the market. The regulators are trying to do their best to regulate that industry and make sure that the consumer is getting a fair priced, fairly underwritten product that's competitive in the market. It's unfortunate that weather has forced so many policies now to have to go into the E&S space, but I don't think it's a competitor market, because if there's no product available admitted and everybody's going to the non-admitted market, they're going to go where the coverage is available to get the coverage that they need for the risk they're trying to protect. Yeah, so one of the things that has always fascinated me about the E&S space is the data analytics and what you can do with weather data, climate data, using AI and technologies in ways that you can build models and risk models that you can use in the E&S space that are very, very difficult to use in the admitted space, right? Because when you have an admitted product that needs to be filed, that needs to be approved, that needs to go through all the hurdles that you need to do from a regulatory perspective, the E&S markets have a lot more leeway in what they can do related to weather. And what I think you're going to end up seeing over time, and what I hope we see over time, is that the learnings that come out of the E&S space and a lot of the futuristic data and model and things that are being done in the E&S space can actually then be applied into the admitted markets, and that the regulators will be more accepting to the learnings from the non-admitted space that actually will bring products back into the admitted markets based on new proprietary models that were developed in the E&S space that were done by all the different brokers and different E&S players that are in the market trying to do those things. If that works that way, right, it just creates more opportunity. It creates a better opportunity for customers to get access to coverage, and hopefully creates better products that will hopefully stay in the admitted space to some extent, and then will also create new possibilities within the admitted markets as well.